Hello, this is CF Liu from howtofinancemoney.com. Now today, in this very short video, I want to show you a review of a performance of an investment performance of my EPS investment scheme portfolio. Now for those who have just joined us or just been following my blog, you know that there is a list of private of approved fund manager under EPF list. Approved fund manager list. Some, of course, everyone knows that you can withdraw your EPF account one to invest in unit trust. There's a various unit trust company for that, and there's also a few private fund manager that actually can assist you to invest and withdraw your EPF account one and invest and manage for you your money in the Malaysia stock markets also. Now the thing is, because in some of my previous articles, I've talked about how you can actually participate in this kind of scheme, which is private fund manager. You can withdraw your money, invest it and give it to a private fund manager to be invested in stocks, which can potentially generate higher return. Now, this exact fund manager, I'm not going to name directly who's the name. You can actually ask me or email me. But thing is, I want to review the performance of my EPF account one since I withdraw that amount somewhere in April 2013 and let them actually invest it for me. Now the time and the day of this recording is actually August 16. Now I want to show you this exact slide. This is my exact account. You can see nothing is censored. Okay, everything is here. You can see that there's this few stocks in my portfolio that this fund manager actually buys from me using my EPF account money. And you can see that there are few stocks that they bought over the past 6 months, actually less than 6 months, because I just actually withdraw this money and give them to invest somewhere in April, and now it's August, so that's essentially less than 6 months. And you can see that the return, okay, the return over here, you can see average rated return is about 9.34. I mean, that is awesome. I would say that it's an unrealized paper gain, but then again, because I'm invested my own money into this, I'm myself also a business partner of this exact private fund manager, means that I can actually help you to open an account and do the EPF withdrawal to be invested in the stock market. But because I'm actually putting my money in to my own money, and I'm putting my money where my mouth is, you see. So I want to review some of the performance. This is my portfolio. Some of these stocks, QR Resource, they buy it at a price at the opportune time that have me a paper gain of about 15%. Asia, although it's not a lot, just one lot, about less than 1%. Maybank, less than 1%, and you can see that Malaysian Building Society, about 6.34%. Public Bank, about 3.79%, and this is the thing, Tunes Holdings. Okay, Tune Holdings about more than appreciated capital gain alone, about more than 49%. So that's the average portfolio of about 9.34% in just less than 6 months. So I'm with this, and the first 6 months, I think I'm very confident with the value investing philosophy of the fund manager. They don't trade, they don't do buy and sell, and so far they just buy, and they are really a value investor. So that is the thing that I want to share with you, my own portfolio. And this is what I want to show you, is that the other thing is, you see, these are the transaction date of starting in April up to July and August, and that is my total transaction, and that is what is the return over here, total return. Now the other thing is, a lot of people actually ask, like, hey, they are actually a bit eager to actually participate in this scheme. I mean, how? Because stocks, it always have a potential of generating higher return than your typical unit trust, or just putting your money there in EPF for that matter. Now the thing is, they are actually afraid that the market has reached an all-time high as of August 2013. So they say, hey, I want to hold my withdrawal because the market is all-time high, because I don't want to enter, at when the market is all-time high. But this is what I tell my client. If you are a client, this the exact thing that I want to tell you. We can't really time the market, right? At least not for us retail investor, which we have our own business to run, and we are not sitting in front of the computer. We are not doing a full job of investing, unlike the people behind those fund managers who are their day job is actually investing and looking at the market, spotting opportunity, buying and selling. Because our not job, and we have limited time, we have limited resource to actually invest on our own. I mean, perhaps if we were to focus, is it like, for example, I'm quite well versed in the REIT industry in Malaysia, so I'm very focused on this industry. I know what's happening, mostly, not all, I know mostly what's happening, so I know what the industry is going. So by that, if you specialize in one industry, then I would say that yes, that's good, that's where you can make money, then I believe in that. But the thing is, if you are talking about you want to look at the whole market, okay, see what are the industry, what are the profitable industry at any one point of time, what are the profitable stocks, profitable companies, simply because we are no Superman, you see. So that is why we leverage the strength of a fund manager to actually manage this for us. Now, a lot of people like say, hey, I don't want to withdraw my money now because I'm afraid that, like I say, the market high. So they say they want to wait until the market actually cools down or drop a bit, then I only withdraw the money and things like that. But the thing is, you see, when you withdraw money, unlike conventional unit trust or unit trust funds, private fund manager who manage stocks, okay, your stocks portfolio, actually withdraw the money or just park it there. They don't actually, after withdrawal, don't actually directly invest all your money inside the stock market. Now I want to give you an example, is that because we really can't time the market. Now, if I were to, because my withdrawal, I started to inject my money in April 2013, then just about 1 month before the election. If I were to, say afraid that, after the election it will drop, okay, it will drop, so I don't want to withdraw my money. So I would have stopped, I would have never withdraw that money in April, about 5 months ago, and park that money there and let the manager invest for me, and I would not have this kind of unrealized return paper gain of 9.34% to date, if I were to say that, hey, I'm afraid of the market drop. Now the thing is, at any market cycle, whether it's bull cycle or bear cycle, I believe that there is always a time, there is always opportunities out there, okay, for a profitable investment to buy in. But the thing is, we don't have the resource, we don't have the time to spot this opportunity. And most of the time, by the time we know about this in the media, the stock has already gone up. But we are too late, because this window of opportunity is only open just like a day or two, and then it's gone. And we have a job, we have a business to run. We are not fund manager, and that is why we miss this kind of opportunity. But if you park your money with a fund manager, if you really want to explore the whole market on your own, then I think that is a good way to actually take this kind of opportunity, okay, maybe part of your portfolio, and see how the fund manager perform, okay, maybe 6 months or 1 year, I'm going to build up the confidence level, spark some money there, like what I do over here. So in summary, if you see, at any point of time, don't be if you ask me, I wouldn't be too concerned about the market timing, because there's always chances for profitable investment at any market timing. What we can do is just park some of our money, okay, if you want to let them manage for you, pack some of the money over there, and then they will actually go autopilot. And of course, their interest is aligned with you, because they charge a 1.5% annual management fee. You can see some of the details over in my previous article. So that is what I want to share with you. The first thing on this private fund manager that can help you invest your money in the stock market to generate a potentially higher return, and you are more in control of your money. Now the second thing is because this recently I also changed my mandate to from discretionary to advisory, meaning that instead of I let the fund manager actually manage this portfolio for me for a few months, but then again I injected some of my EPF money in also recently, and I've actually changed it, transfer the power to buy, the decision to buy and sell back to myself, because I spotted there's a few opportunities in the REIT sector that I don't think the manager is paying too much attention to, and that is what I want to actually buy into this a few REIT stocks that actually generate consistent return and pretty high dividend. And there's one stocks that I REIT stocks that I actually bought in just yesterday is the UOA REIT. Okay, UOA REIT. Okay, I bought like about 35 lots just to see how it goes, because at the price of 1.48, okay, at the price of 1.48, if you are a member of my REIT method, subscribe member of my REIT method, you can see that I have a table over here that actually specifies have all the details of the REIT's fundamental data. I want to look at UOA REIT. Now UOA REIT, okay, pretty simply, the NAV or the net asset value about 1.49 as of last year. So at the pricing of 1.48 is about at the fair value. Okay, so it's not overvalued. That's good. That's one. Okay, if we could get it undervalued, it's still better. But if it's fair value, I guess it's not too bad. And the second thing that I want that actually, the REIT sector, a lot of REIT stock actually dropped recently. So I was looking at this drop, and I say at the current price at 1.48, plus the fact that the last DPU, the dividend distribution of 10.48, that is last year. So assuming if to this year they have like they distribute at least like 10.48 of DPU. Assuming 10.48 DPU, so what we get 10.48 DPU if my entry price is 1 ringgit 48 cent, 148, and just like that I'm getting a gross return of about 7.1% of dividend. Not including capital gain yet. I'm saying that 70% dividend, gross dividend, is pretty good, you see. Although, as you know, the office supplies assets in the Klang Valley and stuff are quite oversupply. But there's a few risks over here, because on top of that, the dividends for UOA REIT it isn't as consistent as other REITs. Plus, the assets for UOA REIT is actually office, which is in oversupply. But then there's some of the risks I'm willing to take. Even though it's a bit inconsistent, but there's some risk over here. But I say that why not? I mean, just give it a shot. After all, it's not all of my portfolio, so that is why I decided to buy into UOA REIT, okay, just yesterday, because I'm changing the mandate from my portfolio under this private fund manager for EPF investment scheme to advisory mandate. So that is, of course, this is not an invitation to buy or sell. If you want to buy, I would actually not profit from anything out of you. So take this as a reference. This is my sharing for today regarding this private fund manager, which provides an EPF investment scheme. And if you would like to actually participate in the same scheme using your EPF money, you are welcome to contact me, and I can actually help you to open an account and do all the withdrawal. Things like that, to actually participate to maximize your returns in using your EPF money. Okay, that's all for today. This is CF Liu from howtofinancemoney.com.